So now we'll move on to conduct of business, and I'll turn it over to the city clerk for item A, please.
Item 6A is accept the city's comprehensive annual financial report, the Measure A and W fund reports, and the Memorandum on Internal Controls and Required Communications for the fiscal year ended June 30th, 2020.
And I'll turn this over to begin with the city manager.
Sure. Thank you, Mr. Mayor. Javon Grogan, City Manager here. We are here today for a presentation of the what we call the CAFR, the Comprehensive Annual Financial Report for last fiscal year, FY 19-20. But before we begin, I want to take this moment to introduce Shin Yu Sun, our new Finance Director. So as the council and community knows, I've been the Interim Finance Director, but as of yesterday, our new Finance Director started. And so Shin Yu Sun, welcome to the city of San Bruno. She comes to us having been the investment manager for the city of San Jose, responsible for over a $6 billion portfolio. And so she'll have no problem managing our funds. So welcome.
Thank you.
So we're going to toss the hard questions today to her since it's her second day on the job. Today's presentation will actually be three people. It will be myself, Jim Steele, our finance consultant from Management Partners, and then our independent auditor. And so the objective of the presentation is to receive the comprehensive annual financial report, and also audits for Measure A and Measure W, which are required by law due to those funding sources, as well as a memorandum on internal controls and other communications for last fiscal year. And as a reminder, we operate on a July 1 to June 30 fiscal year. And so all of the information that we'll be talking about today is for last fiscal year. So July 1, 2019 through June 30, 2020. The agenda for this presentation, a brief slide on nuts and bolts. We will talk about the results of the audit, and we have the auditor's presentation embedded within this presentation. And then we will have financial highlights, both the general fund and our enterprise fund. We'll talk about our memorandum of internal controls. We'll do a brief talk on pension liability that we will talk more about during the budget process. We will present the Measure A and Measure W reports, and then we will have the requested action from council and questions.
City manager?
Yes, sir.
I'm not seeing the slides unless it's just me. I mean, I see the slides, but I didn't see it progressing or blown up.
Well, that is a mistake. Can that be seen by council?
Just the first slide.
Okay, I see it, yes.
We're not seeing presentation mode.
Correct. Thank you, Tom.
Oh, saw it for a second.
Now?
It's not a presentation, but the right slide.
Okay.
Javon, would you like me to pull it up?
Yeah, will you pull it up? It's final two. We are stumped at exactly what's happening.
Okay, if you can go ahead and stop sharing, I will pull it up. I'm sorry, did you say this was final two or final?
No, it should be the CAFR, Melissa.
Okay, thank you.
Okay, Melissa, let's advance to the next slide. And so I went over the agenda. The next slide is just the nuts and bolts of the CAFR. For the council and members of the public, the CAFR, you have been provided with a hard copy as well as electronic copies, and there are three individual reports attached to it. There are major sections that provide an introduction, a financial summary, several notes on financial statements in paragraph form, and then a statistical section which talks about general statistics of the city, both our employers, as well as FTE and other information about city operations. So now slide 5, if you will advance, we will turn the presentation over to Mays and Associates for a presentation on their work.
Great, thank you for having me tonight. Good evening, Mayor and members of the City Council. My name is David Alvey, and I'm the audit partner with Mays and Associates, and we are the city's independent external auditor. And I'm going to give you kind of a high-level, 20,000 feet overview of the audit process and why it's important. Our annual audit, so we have for you the June 30, 2020 comprehensive annual financial report, is required by not only the government code and your city founding documents, but it's also required by all the bondholders that have bonded debt or issued by the city of San Bruno. And really our goal as an auditor and as a CPA is to protect the public's interest and to render an opinion that we can say as an independent external party that these financial statements that you have in front of you, in my opinion, my firm's opinion, are either free or not free from material misstatements, and to give that assurance to the public that what they have in front of them is accurate. Our audit is broken up into two different phases. We have an interim phase and a final phase. The interim phase is typically done before the books are closed or before June 30. And what we do in that phase is we plan the audit completely from start to finish. And it's almost like a scientific method where we're looking at what we think we're going to get into. And then as information comes about, our audit plan changes. A lot of the audit plans that we had before March 2020 were a lot different as it progressed through COVID. But the brainstorming with the entire team, and we actually did have a meeting back in June with the mayor, the vice mayor, and the city manager about other areas of concerns. So not only can we look at it from an audit standpoint, but we ask if there's any concerns that you have on your side that you want us to look at. And we look at internal controls. And what we're doing is we're making sure that there's proper checks and balances, segregation of duties, so one person cannot start, approve, and record a transaction all the way through without some kind of level of approval. And our testing, we look at cash disbursements, make sure that they're being properly approved and following your purchasing policy. We look at cash receipts, revenue coming in. We look at payroll, make sure that pay rates are properly authorized and correct. And then we look at the internal control environment overall. And after we get an understanding of how the machine or the bones work of the city, we come back at final, and that's when we test our actual balances. So we're testing that cash balance to make sure that the cash you have in bank at June 30 is correct. The capital assets by additions and retirement testing. We're looking at those debt transactions, and we're looking at your net pension liability. And once we do that, we prepare the financials, we help draft the footnote disclosures, and we issue the reports. Next slide, please. So the results of the audit, like I said, it's really the auditor's opinion is what's really key here. And I'm pleased to say that we issued an unmodified or clean opinion, and that's the highest level of assurance that a CPA firm can give. And we conducted our audit using auditing standards generally accepted in the United States, and we feel that the financial statements you have for your review tonight are fairly stated in all material respects and conform with accounting principles generally accepted in the United States, also known as GAAP. We do have an emphasis of a matter paragraph on page 2, which calls out the CityNet Enterprise Fund. And we just wanted to bring to the reader's attention that the CityNet Fund has had operating losses for multiple years. Current year, the operating loss was around 1.7 million, and it has a deficit net position of almost 17 million. And we'll talk about that on the Memorandum of Internal Controls. Next slide, please. So the Memorandum on Internal Controls is a separate document than the CAFR, and this is my firm's communication to the City Council of things that we found during the audit. And we do have a comment about the CityNet fund, and it really boils down to, like I said earlier, the growing net position deficit. It was 13 million in 2018. It grew to 15 million in 2019, and then we ended 2020 with a deficit of 17 million. And really the risk comes to the fact that it owes the general fund around 13.6 million for 2020. That increased a million over the June 30, 2019 report. So that's the real risk that we want to bring to your attention, that we need to be really vigilant in getting a good business plan for the CityNet fund. And I know the fiber to the home is being discussed a lot, and we would just like that plan to be looked at very carefully, preferably by an independent third party, to see how viable that is. And after all this is said and done, it really comes down to the definition of an enterprise fund. And an enterprise fund should be able to have operating revenue cover operating costs, to act like a business type or private business fund. That's the idea of a general fund. And if it's truly not charging enough, the operating revenue was 9.3 million, operating expenses was 11 million. So if it's really not charging enough, then is it a true business type or enterprise fund? If it's not, then it really should be considered a special revenue fund and rolled up under the general fund. So that's an option. That's something you can do. So we just want to make sure that you're aware of this, and that's why we have the emphasis of the matter in the opinion, and then we have the comment here. The rest of the Memorandum on Internal Controls is the required communication piece, and that's boilerplate language. I'm pleased to say we had no unusual items to bring to your attention, no unusual transactions. We had no disagreements with management, and no difficulties other than the pandemic in performing the audit. And with that, I would really like to thank Darlene and Jim for their help during this process. The fact that you have no internal control issues during a shelter in place and with everyone working possibly remotely from home is a true testament to the focus of internal controls at the City of San Bruno. And with that, I'd like to give the presentation over to Jim.
Mr. Steele?
I'm not sure if I'm on, but
Mr. Steele, you're on. Please go ahead.
We can hear you, Jim. Go ahead. Melissa, can you advance to the next slide? And the next slide. Okay, Jim, go ahead.
am I on?
Yes.
I'm sorry, I'm not able to tell him. Give me a thumbs up again. All right, thank you.
We can hear you, sir.
Before
Please
I start,
go ahead.
I do want to acknowledge it was a difficult year with COVID and working from home. It's quite challenging, and I want to acknowledge Darlene Wong, the accounting manager, and her staff for doing such a bang-up job on this, and especially difficult not only due to COVID, but they lost their finance director right kind of in the thick of things. So I'm going to go over first general fund financial highlights. And just to recall, the pandemic really started hitting economic activity in March. So more than the entire last quarter of the fiscal year saw a really tremendous impact on revenues, not just in San Bruno, but throughout the Bay Area, the state, and the nation. So fund balance overall in the general fund decreased by $1.8 million during the year. The revenue shortfalls were a lot due to the pandemic. Sales taxes came in under budget. Some stores closed, businesses shuttered, and so there was a lot less activity. Business taxes came in $0.7 million under budget. This was the Sky Park airport parking facility. They went out of business, as I understand it, so you no longer got that lucrative source of funding. And hotel tax, TOT, transient occupancy tax, came in almost $1 million under budget. So we've seen, just anecdotally, we've seen about a 75% drop continuing through the mid-year of this year. So that's been a really large impact on San Bruno because you're right next to the airport and how that's such a major part of your revenues. Next slide, please. Permit revenue came in $2.5 million under budget. There were some large development projects that were scheduled to go. The city manager probably knows better than I do on this if this was COVID related, but I know that the spring season when COVID hit is that's a time for a lot of construction typically. So that would have affected that source of revenue. Charges for service primarily was dropped $0.8 million, primarily due to the recreation department. They have a lot of programs that were just completely closed, as you know. On the flip side, they were able to save budget dollars on their expenditures to help make up for that. And then last on this page, this is an accounting entry that doesn't affect cash, but there was an entry that one of the council members or two asked about use of money and property. It was $1.1 million over budget. Once a year, mark-to-market requirements are that cities book the fair market value of their investments. So there's no actual cash transaction there. It happens once. It could have gone the other way, but basically the city buys and holds its investments to maturity. So changes in market value don't really affect your portfolio, but we need to book it to follow accounting conventions. Next slide, please. Overall, expenditures were down $2.2 million. Really good news, given that the revenue was down. And as I mentioned, Parks and Recreation revenue, expenditures had savings of $0.8 million. There were additional vacant positions throughout the city. And in public safety, there were also savings of about $800,000 as well. So fortunately, there was savings to offset those revenue declines. Capital outlay was $0.6 million under budget. There were some vehicles and equipment primarily that weren't able to be purchased by year end. So those get rolled forward to the current fiscal year. Next slide, please. I'm not going to go over all the numbers. I want to call your attention to a few things. This is budget to actual for the general fund. Overall, this is revenues. Revenues came in $3.5 million below budget. The big ones, as we mentioned earlier, were in the taxes, in permits, and in charges for service. And again, that use of money and property, technically that's a correct transaction, but it really didn't have an effect on your cash reserves. Next slide, please. On the expenditure side, again, I'm just going to call your attention to a few things. Budget to actual, you did save 2.2 million, which is really good news. Public safety had large savings, and we already talked about Parks and Rec, library as well, but really across the board. So that was good news. Next slide, please. Overall changes in fund balance. So let's just look at the bottom line to make it simpler. The final budget projected reserves of 29.1 million, actual 27.4 million. So it was really $1.7 million less. Next slide, please. And here are the status of your available reserves at year end. So that accounting treatment we talked about is not part of this. There's the general fund reserve at 11.8 million, general fund contingency at 1.3. I believe your policy targets are 12 million for that first one and 1.5 million for the second. For the emergency disaster reserve, you're at 1.9 million. For capital improvements, you set money aside sometimes on recommendation from the city manager. The city council will approve setting money aside that are oftentimes one-time revenues to use for future capital improvements. That ended the year with 4.6 million. You also have a practice of setting aside one-time revenues in an additional reserve, so it doesn't mix up with the other reserves that are more, think about it more as ongoing, and that was 1 million. Measure G, that's the half-cent sales tax. It's actually a use tax. That was in effect, was it just the last quarter, I believe? So you did put money aside. There was more revenue than there were expenditures, but that's $500,000. And then last, the general fund equipment reserve at $3.3 million. So your total general fund reserves are 24.4 million. Going back to what Mr. Alvey from Mays was saying earlier, part of your reserves are locked up in a long-term loan from CityNet, and if you that's not immediately available, so your real cash reserves are just under $11 million. Next slide, please. For the water fund, just high level, you did have a net operating, profit's the wrong word, net contribution to your reserves of $500,000. And the unrestricted fund balance at the end of the year, that's kind of equivalent to cash that you're able to use on capital improvements, et cetera, was 30 million. And we talked about this, I believe it was the previous council meeting being one reason why you were able to hold off on the next rate increase for water, because there really is a healthy balance there. Next slide, please. Wastewater fund, similar. There was a net operating gain of almost $7 million. Your unrestricted net position, or your kind of available cash balance, was $28.9 million at the end of the year. And the same message there. You were able to forego that last 5% rate increase coming up because your reserves are doing so well. Next slide, please. Stormwater fund is a different story, unfortunately, and I believe last year you also had some events that caused some extraordinary capital projects, if I'm not mistaken, but there was an operating loss. If you notice, the beginning net position was 5.9 million, and it went down to 5.5 million. And that's a little misleading because net position includes all the assets, fixed assets in the ground. Your unrestricted net position, or fund balance, was really closer to $500,000. So that's been going down as well, and that's why city manager has been discussing with you the possibility of a stormwater fee increase for later. Next slide, please. CityNet fund, and we already talked about this. There was an operating loss last year, and the unrestricted net position is almost $20 million. So we've already really gone over that. There's really not a lot left to say other than the general fund has been backstopping that for a number of years. Next slide, please. Pensions. Pensions are a section in the CAFR, and it's really important to consider that. You might also want to have an update on this by itself at some point. Not only are pension costs going up, it's interesting that even though you had salary savings, your retirement costs went up. So retirement rates, PERS rates, the rates that you're required to pay to CalPERS, are continuing to go up. And that's across the board. That's not just San Bruno, that's throughout California. In addition, the net liability has increased 77% since 2013-14. So from June 2019 to June 2020, overall, the net pension liability went up $6.2 million. So if you had, at the end of June 30th, 2020, $94 million in the bank that you could set aside and pay down all your pension liabilities, that's what that means. And there's a couple more slides I'd like to that kind of highlight this better. This shows the growth in the unfunded PERS pension liability over time from 2012-13 through this last fiscal year. And it's gone up for a number of reasons. Demographically, people are living longer, so their retirement benefits have to last longer. And in addition, investment returns have not kept up with what the target is. And the last one just shows that the employer, that's the city, is paying roughly 50% of total costs on an annual basis. Next slide. This shows that it'll take until 2043, so that's about 22 years from now, if everything continues the way it's been going, and if the city just meets its minimal payments to CalPERS on an annual basis, it'll take that long for your unfunded liability to go down. Next slide, please. There are two other reports that are required by the county to have separately and have the audit pass judgment on that, which the auditors have. That's because San Bruno's getting funding from the county in Measure A and in Measure W. And so there's a Measure A report that was separate, and that was, I believe, included in your council packet as well. That was used for street rehab, street medians, traffic calming, sidewalk repair, and pedestrian ramps. Next slide. And the second report is Measure W. Again, it's like Measure A. The county wants a separate audit opinion on that, and that passed muster. $0.4 million was appropriated for pavement management in 2021. Next slide. So there's no formal action that council needs to do as far as adopting a resolution, etc. So we're just asking you to receive and accept the presentation, ask any questions, and we'll do our best to answer those. Thank you.
Thank you, Jim. And for the council, we are here to answer any questions. And again, the presentation reflects what happened last year, which was a very, very challenging year for the city. So that's fiscal year 19-20. And so, Melissa, if we can stop screen share, any questions from the city council on the staff presentation, and then we can have public comment after that.
Thank you very much for the report. I'll go to council quickly, and that would allow any residents to go ahead and put their hands up, so I'll start to see those. So let's begin with Councilman Hamilton, please.
So it's more of a comment than a question. Part of the discussion about CityNet and presenting options on whether to whether or not to, how to manage the fund, whether or not to fold it into the general fund. I would recommend that we hold off on any discussion of that until we receive the comprehensive report on CityNet in late June, rather than spend any effort on that now. That conversation in June could drive a lot of the decision. Thank you.
Other questions from council? Okay. Councilmember Mason.
Thank you. Can you hear me?
Yes.
You can. Okay, great. Thank you. I did want to just ask, you made a comment on, I believe it was slide 18. I don't know if you want to go back to slide 18, but slide 18 around the stormwater fund being low. So given that I'm not sure how familiar the auditors are around the existing request or ballot that's going to be sent out to voters around whether to pay an increase on their property taxes to assist with the stormwater fund. But I did want to ask, based on your review, is that something that appears to be needed? Because when I saw slides 16 and 17, the financial situations were significantly different.
With an enterprise fund, like I said, kind of with CityNet, is you really want it to be operating where operating revenues will cover operating expenses. Obviously, you have to have sometimes a little bit of income to put aside for capital projects in the future types things. So yeah, anything you can do to get more coverage over your operating expenses to either have a very small income or no income is ideal.
And so based on what your review, how do you see it? Is it breaking even now, or are we under where we should be for a healthy enterprise?
Jim, did you want to talk about that?
Yeah, we haven't discussed with the city auditor the financial situation of the stormwater fund. So for example, and David will correct me if I'm wrong, he's not aware of the big backlog in capital improvement projects. So David, one of the things the city is hoping to do if the council moves forward and the voters approve is to pay for $30 million of deferred capital projects over the next 15 years. So that fee would actually bring in more than just the operating cost every year. It would be enough to pay for capital improvements plus debt service. So, and I'm sorry to take away from your question, council member. I'll shut off.
Javon Rogan, city manager. In addition, Linda, the projection that we provided council in the budget package show the stormwater fund going negative next fiscal year in the 2021 fiscal year. And revenues are not covering expenditures. They have not for quite some time. And currently the average single family home is paying $46 a year in stormwater fees. And so that's one of the reasons why the current effort for a 218 process to increase those annual stormwater fees has those charges going up for the average single family home to approximately $150 a year. And that's to cover both the operations and that $30 million of long-term capital that Jim Steele mentioned.
We don't hear you, Linda.
Linda, you're...
Can you hear me now?
Yes.
Yes. Okay. Let me take off the headphones for a minute. Yeah, that's actually what I was looking for, because I think not everybody who's watching is going to read the staff report, so it's helpful to know that that is the next step would be in the negative. I also did want to ask a question about slide 20. So slide 20, Mr. Steele just made a comment. I think when he was giving the report, he said something like, if we are barely covering the minimum, then we're not going to get to where we need to be until 2043. And I just wanted to know if there's been a decrease, because I feel like I remember last year's budget report being that we actually give a little bit more than the median city towards our pension liability, which made me feel more comfortable. And so I wanted to know if there's been a change there, or if we're going to have a full conversation about this during the budget meeting.
Sure. Let me expound upon that, and then I'll turn it over to Jim Steele. So what Jim Steele was mentioning is that we pay the annual required contribution to CalPERS for our pension costs. And so two things are true. Yes, we pay the annual required amount, and we are paying, our plans are slightly more funded than other cities. The way to think about the pension liability and why that chart, Melissa, if you can bring it up, it's slide 22, goes out to 2043, is that you should think of our unfunded pension liability as a mortgage. And when you pay your annual mortgage payment, it's paid off. And in this case, roughly, I think it was 22, 23 years from now. And so, as you, slide 22. And so for the city's pension liability, we are budgeting annually the required contribution. Now that required contribution is going up. But as long as we pay that required contribution, the amortization schedule, similar to a mortgage, has that being paid off in 2023. And that annual required contribution actually has two parts to it. One part is a normal cost, so you're paying for the benefit that employees accrue each year, but you're also paying a portion for that unfunded liability. And so once we get to 2043, we will only be paying the normal cost. So we will not have this essentially unfunded liability that we're chipping away at like a mortgage. Annually, our contributions will go down and we will be paying just the normal costs. And this portrait is virtually true for just about every municipality in California. Certainly that has CalPERS, but even other pension systems, in how the unfunded liability, what's called the UAL, is treated on a multiple year amortization schedule.
Thank you for the explanation. And I'll have more questions, but I'll wait until it comes back to budget because I understood that there's going to be a deeper conversation around this. And then just one last question. And maybe this is a different meeting, just let me know. But so Measure A and Measure W are both appear to be, I'm guessing, ballot measures from what I've seen. Is the money that's spent there, is there an oversight committee, a board? Who reviews it is part of the question. And the other part of the question are those funds equally distributed between the cities based on how much they put into them? Or are those distributed based on who requests the funds for them?
I could take a stab, City Manager, if you'd like me to start. Those were both ballot measures. They are distributed, I believe, based on population, and they're granted to cities. So you don't need to necessarily apply for these. They're audited as far as there's reports, the audits that are provided that David Alvey spoke to earlier, that there's also compliance reports that the finance staff file every year with the county, and they make sure that what was spent fit the guidelines of what the funds are for.
So San Bruno residents would be getting what they paid into this Measure A and Measure W.
Well,
not directly, it's based on population, but if everybody bought the same number of gallons of gas throughout the county, then that would be true.
And then Councilmember, just Councilmember Salazar is on oversight on one of those. I believe it is A. And on Measure W, the way it's stipulated is the monies that are going to be appropriated in W for the pavement management for each community, whatever it is, unless the CPI, I believe 63, 64 is not greater than that, it must be utilized for that. Once a city or jurisdiction achieves beyond that, then they can use those monies in another form. But the voters had approved that it specifically has to go to improve the streets and roads, which any city had not gotten prior to Measure W.
Right, thank you.
Mm-hmm. As perfect timing, Councilmember Salazar.
Thank you, Mr. Mayor. I just wanted to start by welcoming our new finance director. Welcome aboard. It's a great time to start. You know, we get to jump right into a new budget soon, and so we're definitely happy to have you. You got some big shoes to fill because Keith did an amazing job for us, but I know you're going to do an amazing job as well. So welcome aboard. Also wanted to thank Mr. Steele for filling in the meantime. And I don't know if we're going to have you along for much longer, but thank you for also being there to help us along during some difficult times. And I don't have any questions either, just some comments. I wanted to say that this document is, I think it was mentioned, it's a snapshot. This is our annual report for what happened last year. And it was kind of an ugly year for us. There were some huge unexpected shortfalls in the second half of that year. And, somewhere hidden in this document, among the charts and the graphs and the explanations, is a story about how we were able to recover. We were able to recover from some, like I said, huge unexpected shortfalls and still get through and get all of the work that needed to be done. And this audit shows that we did it by the book. We did it well, and everything was up to snuff. And so I think that speaks volumes to what our staff was able to pull off for us. And so I wanted to add my thanks to all of the staff, everybody who chipped in to build that story that we're telling here.
Vice Mayor Medina.
Yes, thank you, Mayor Medina, and thank you all for this audit. It's really important to have an independent set of eyes come in and tell us, hey, things are good, things are being done properly, even though it's some bad news. We've been dealing with CityNet, San Bruno Cable, the issue for a number of years, and we need to solve this in this upcoming year, and we will have this updated plan, and we need to make some very tough decisions. What's also good about this audit is it identifies clearly that we have some problems in our stormwater, which is funding, which is exactly why this council made the difficult decision to let our voters decide on how they're going to proceed and how we need to work together to get this funding, because we can't rely on our general fund. So a lot of work remains to be done. So this is good to see that we have a good report out from the audit, and I look forward to working with everyone in solving these problems. So thank you.
I have not seen any members of the community. One last call in case. And I won't repeat it, whatever we said, so we can get through the agenda, but a lot of things have happened. I believe 213, having a reserve policy, was great. We've received awards over the last few years for the process and the CAPR, and so that's appreciated. And that is thanks to all staff, because like between COVID, between our finance director taking another opportunity down south, it doesn't make it smoother. It could even make it harder. But for all the finance team, all of them, Darlene, Esther, all the folks that have helped and assisted, I appreciate that, because everybody's had to step up and do more in very daunting times, and trying to be here as limited at City Hall or doing your work from home. So I want to thank you for that. And again, Councilmember Salazar is correct. It is a snapshot. Most importantly, it's a trust but verify. It is to know that we have had more policies, procedures in the last couple of years, and segregation of duties, and strengthen the way implementation is done for deposits, having checks scanned through quickly so they get deposited faster. There are a lot of things that have been done that nobody sees, but the team has done. So to all of them, thank you. If there's no more comments from council and no members of the public, we'll bring it back. This is to accept the city's comprehensive annual financial report which is Measure A and W funds, and what we have had presented to us. We will be needing a motion and a second and a vote in order to accept. Any action?
To the chair,
Yes, please.
I will make the motion to accept the CAFR.
Is there a second?
Second.
Thank you. Motion Salazar Medina. Roll call, please.
Councilmember Hamilton,
Aye.
Councilmember Mason,
Aye.
Councilmember Salazar,
Yes. Aye.
Vice Mayor Marty Medina.
Aye.
Mayor Rico Medina.
Aye.
Motion carries.
Thank you.